So again, my name is Graham O'Neill, Philadelphia Department of Revenue, presenting today on the owner-occupied payment agreement updates that happened this April because of council legislation that was passed back in October. So just basically, what is an owner-occupied payment agreement? So OOPA, the OOPA program is what we call it, and I'm going to keep calling it OOPA because the whole title is way too long. Are people who own and live in their home so they can make affordable monthly payments. Basically, the City of Philadelphia, through the Department of Revenue, does not want to foreclose on anyone's property if they're an owner-occupant, and just because they haven't paid their taxes. We want to give them an affordable way to become compliant, and that's what OOPA is all about. It's a way for both the Department of Revenue and the city to collect the money that's due for the cities and the schools, but also for a way to make sure that people aren't going through the trauma of constantly thinking their home they might be evicted from their home, because as we all know, if they get evicted from their home, there may not be any place else to go, and a lot of that burden is even going to shift back onto the city in terms of keeping that person fed, healthy, and alive. We want to make sure people can stay in their home and do that. So how does it work? Taxpayers come to either the Department of Revenue or to Linebarger or GRB, which are two outside collection agencies that we hire to collect a small portion of the debt. You go there, and when you come there, you're asked, are you an owner-occupant of your home? If you say yes, you're presented with the OOPA program, so you have to verify where you live, the property, and that you live there, and that you're the owner. And you have to then get into an affordable monthly payment that we base off of either a percentage of someone's income, in about 95% of cases, it's just this first option, or we use a individual review of income and expenses. So we look at that person who say, our monthly payment, they say, is still too high. They're going to come back to us, and we have a way of making, okay, well, if we think 10% of your income is too high, let's look at your income, let's look at your expenses. If it comes below 10%, we'll put it at 8% of your income, or so on and so forth. So basically, it's all about just making sure that we don't say no. We figure out a way to get that person into an agreement that's actually affordable for them. So just to go over a little bit more in detail what these different residency requirements are, or different requirements themselves. So ownership. Taxpayers must be the record owner of the property, or, and this is very important, if they're not the record owner, if there's someone who inherited the property, they're living in their grandmother's house, or for whatever reason title never actually transferred to them, we have something called equitable ownership. That's for someone who can come to us, and this wouldn't be someone that would get take care of at the concourse. The concourse level at MSB would send them upstairs to our law department, and we would review things like, have you lived in the property for 14 years? Have you been keeping up the expenses? Are you the person that this would have passed to had there been a probate process? It's a whole process. We can go into that in more detail in a different training, but there is a way for someone who's not the record owner, as long as they're living in the property, to get into an OOPA agreement.
Graham, I have a question. Do they have to have all the utilities in their name?
They have to have all.
Do y'all ask for one, like, what utility do y'all ask for, the water bill?
So the question is, do you have to have the utility bill in your name as well? There are mechanisms for people to get those water bills in their names if they're not the record owner. So we do like for the person to have that water bill be in their name. If not, we can work with them to figure out how do we get that into your name in the case of a water bill. Or someone does not have to show us a utility bill. They can show us other documentation that proves that they're a resident. So it could be in the situation where someone was making the mortgage payments, it could be that, or it could be voter registration. What was that?
A will.
A will wouldn't necessarily establish residency because it's more of a document. It's legally talking about how person A transfers that property to person B. It doesn't really establish residency. But this sounds like we could actually have a whole separate, more in-depth conversation about what exactly is OOPA, a whole other training. But I'll be more than happy to set that up for you guys so we can go in there. This training just will dive into all the different documentation requirements. But hopefully maybe we can cover that question at the end. The first way in the way that most people come into the OOPA program is they come to us, they say, I'm an owner, I'm an occupant, my income is this, and we go, okay, let's put you into what we call a tier. And we base it all off of tier 1, tier 2, tier 3, tier 4, tier 5. So tier 5, and I didn't set it up like this, it's just the way it is. Tier 5 is the lowest income level, moving all the way up to tier 1, which is the highest income level. And with each one of those income levels, so say you're in a tier 2, meaning you are in a 2-person household that makes $4,000 a month, we're going to put you into a payment agreement plan that is 10% of your monthly income. So if it was $4,000 a month, $400 a month would be what we would need you to pay at minimum once a month to give for your property, towards your property tax bill. And then we're also, once you complete it, so once you make all of the payments that are in the agreement, we're actually going to wipe away 100% of the interest that's been accruing the entire time that there's been a delinquency. And then we graduated, so at the lowest income level, we forgive all of the interest and all of the penalties. So then there's another way that people can get in. Those are the people that we would say in that situation who says, hey, $400 a month, that's a lot of money. I only make $4,000 a month or whatever it is. We would go, okay, well, if you truly don't think you can afford that, let's go through a household, an agreement based off an individualized financial assessment is what we call it. That's what we're going to look at. We're going to do the same thing. We're going to look at all your income and quantify it and verify it. But then we're going to walk through all of these different expenses, and we're going to you're going to have to document them. You're going to have to prove that they're regular. This is a much harder way to get into the program because there's a lot more documentation. And it's designed that way because it's really only supposed to be like the safety valve for that one person or two persons a year that one of our taxpayer systems folks talk to that is legitimately can't afford it because of really high medical bills or because the situations you can't really script them, but it's a way for those unscripted situations that happen in life to be accommodated by our program. One thing is that they won't pay more than 10%, so they won't pay more than what that is. So like if they go through this exercise and it says that, hey, you actually have $600 a month in a payment agreement in excess income, we're not going to make your payment agreement $600, but we would have made it $400. So what I'm here to talk about today for people that were working with OOPA before is what happened because of the legislation that was passed. So what's new is that you guys passed legislation in October that said that we had to update our OOPA regulations and do a number of different things. What that all really boiled down to was some taxpayers are going to now be qualifying for $0 monthly payment agreements, meaning before the minimum payment that we would ever give to anyone was $25 a month. You could come to us and say, I had no income, and we would still say, okay, you need to pay $25 a month. Now, with that new Tier 5, there's a way for someone to actually subscribe to $0 minimum monthly payment. And we'll go into each one of these in detail. So number 2 is some agreements will automatically have their current year taxes rolled in, meaning most people that come into OOPA, if say our typical OOPA participant is someone who came in 2013 because they had a hardship agreement. We talked to them in 2013, we put all of their taxes, all the years, we say they go from 2009 to 2014, we put all that into one agreement, and we said now it's your responsibility to keep paying all the taxes that become due every year. We're switching the way that we're going to be doing that. We'll talk more about how that works in a moment. Some agreements will have their payments applied to current principal first. We'll go into detail on this, but this is really just an internal way that we account for monies as they come into the city. We're going to switch it in order to make it more beneficial for some of our senior taxpayers to make sure they can get the PA property tax and rent rebate. We'll talk more about that in detail as well. And then if requested, OOPA applicants have the rights to meet with a housing counselor. So everyone in the city of Philadelphia, because of the numerous different pieces of legislation, but also including the original OOPA bill of 2013, really expressed and stressed that every Philadelphian had the right to go meet with a housing counselor, meaning one of DHCD's approved housing counseling agencies, which there's 20 about over the city. So what this law did is it say, okay, well now we can't just make sure that people are aware of that. We can't just put the information in our bills like we did. We can't have it with our taxpayers. We can't do all the things where we just hoped people would get the information. We have to actually now ask, and we on the application, are you going to be, we have to offer this housing counseling and say, hey, do you want this housing counseling? And then if someone says yes, we have to then transmit that information to DHCD so they can set up an actual appointment for that person. So the biggest deal for us, and I think for everyone, is that some taxpayers are now going to qualify for $0 a month payment agreements. When we ran our projections when this bill first came out, we don't think it's going to be a huge percentage of people coming into OOPA because most people that have zero income or within this income range are pretty low income. It's going to be a special case scenario. But the reason we set it at 15% of area median income is because that's right around where Social Security is, supplemental SSI is for a one-person household, for that one vulnerable senior that's been in their house their whole life. We were trying to accommodate with that person in mind. So right now, or under the old system, I should say, anybody got that minimum $25 payment agreement as long as they were at 30% of AMI. Now what we're going to do is say at 15% of AMI, if your income's below that, which is $728 a month for a single person household, your minimum monthly payment is $0. So our agreements are going to come out. People are going to have an agreement to sign that says, as long as you pay us $0 a month, you will not be considered delinquent on your taxes. Therefore, the city will have no right to come and foreclose on your home. We're going to call those people Tier 5. In the OOPA legislation itself, it never sets out a new Tier 5, but because the income brackets work out that way for the vast majority of everyone in the program, for our staff and for everybody who works on this program, we wanted to really keep with the tiered system. So then that's just the income way to qualify for a $0 a month payment agreement. Then there's some ways that you can qualify if you have a higher income, but you have a couple different characteristics that might make you more at risk for the consequences of foreclosure. And those are if you're 65 plus, if you are 55 or older, and an unremarried widow of someone of a property owner who was 65 when they were deceased, which is like the longest thing I've ever had to remember from my job ever. That person also can qualify for a $0 a month payment agreement, and also someone who is permanently disabled. And what we mean by permanently disabled is, as determined by the Social Security Act, or the Railroad Retirement Act, is someone who is getting Social Security disability income, someone who is getting a VA disability pension, someone who's getting a black lung pension, or someone who's applying for any one of those federal government disability programs that come with income. We'll talk about it when we go over the forms, why that's really important to remember, but it's a very important distinction. So all of these people, if they let us know that they are one of these and we verify it, if their income is below 30% of AMI, which is obviously double of 15%, which is around $1,400 a month for a single person, they're also going to qualify for a $0 a month payment agreement. Everything else in terms of the income programs will stay the same. If people who are between 15% and 30% who aren't one of these things will still qualify for that Tier 4 agreement, which is 5% of your income, or $25 a month. And then also anybody who goes through that second, more complicated option with the expenses, that person, if that net figure comes down to below $25 a month, we're just going to give that person a $0 a month payment agreement. That's because we really don't collect any money if we're only getting below $25 a month. What we expend in staff time, just trying to make it work in our system, would not make it worth it. Some agreements will automatically have current year taxes rolled in. So what I was talking about with this is that, say you had an agreement, if you're in Tier 4 and Tier 5, if you had an agreement on April 1st of this year, if you still owed your 2018 taxes, we took that 2018 tax balance, say it was $500, and we put it into your existing OOPA agreement. That was so we could kick it off, because every year we're going to be doing the same thing. Anyone who comes into an agreement that doesn't either pay their taxes by the time they're due on April 1st, or still has money out there for whatever reason it is, we're going to take that open agreement, that open balance, put it in their agreement, so their previously 2017 agreement becomes a 2018 agreement. They still have the same minimum monthly payment, but the agreement will technically get longer. So there will be a situation where people in those $0 payment agreements will just have balances that will keep accruing officially on their tax balance. It won't be enforceable, we won't be able to foreclose on them, but when it comes time for that property to transfer, that money will exist on the balance. It's an important thing to remember. So whose agreements are those? Everybody who's in Tier 4 or in Tier 5. I think we covered how you get into one of those. Can taxpayers still pay their current year taxes? Yes, they definitely can. So regardless of anything else, if someone wants to walk in and hand us a check for the money on the account, we will take it. And people can also opt out of this automatic enrollment. They can either do that at the time of application, we'll have someone ask them that question, or they can call in, or they can send in a form, and we won't automatically roll it in, but an important consequence to remember is that they will then be liable for those new balances that are accruing. So it's a very important conversation to have if someone comes in and says, why am I defaulting? I did everything. Well, if they didn't ask us to automatically roll that balance in, and it means that they became liable for it, so that's a good time to reach out to our office and figure out what we can do. Some agreements will have their payments applied to the current principal first. So the way it works now, or the way it did work when I made this training 2 weeks ago, was that when you gave us $25 a month on your OOPA agreement, we took that $25 and we looked, what's the oldest outstanding principal? So if say it was 2007, there was $25 due, we put it on the 2007 balance. That usually worked great for everybody because, for most people it does work great because it means you pay down that principal first, and that principal, which is the biggest balance because it's something called capitalization, you're going to end up owing us less in the end if you just start paying down your oldest balance first. Kind of works like credit cards. The only people that didn't work for were seniors who otherwise would have been eligible for the property tax and rent rebate. It's a weird vagary of the law, but if you don't pay us the last year's taxes, the state won't rebate you any money. Even though the money's not coming from the same pot, they just won't do it. So what we're going to do now is anytime, and what the law says we have to do, is anytime we have evidence that someone is likely eligible for property tax or rent rebate, we have to automatically start putting that $25 to last year, the most current open principal due first. So that way we can go to the state and just say, yeah, they did pay us something back. People can definitely opt out of this as well. The way we're going to make this work is we have two new questions on the application that really get at, do you qualify for this or the $0 a month payment agreement? They're going to help us answer that. We're also working with the Pennsylvania Department of Revenue to actually get a list of anybody who's qualified for property tax and rent rebate in previous years, so that we can match it up and go, okay, even if for some reason this person falls through the cracks and we don't start applying that payment, we're going to have our accounting system automatically set so that this property address, any OOPA that one comes in through, is going to have their payments applied first. And so what are the consequences of opting out of these changes? So some taxpayers will qualify for $0 a month payment agreements. Taxpayers will qualify for a $0 minimum monthly payment. Taxpayers can pay more than this at any time. Some agreements will automatically have current year taxes rolled in. Taxpayers opting out of this, as we talked about, need to pay up their current year balances if they do through a standard agreement. They can come back in, put the new balances in, or they just pay it in a lump sum, but regardless, they need to make sure that those payments are taken care of. And some agreements will have their payments applied to current principal first. Taxpayers opting out of this just won't be eligible for a property tax and rent rebate that they might have been already eligible for. So what can your constituents expect? We wanted to address this too, is letter for participants explaining changes. So in mid-April, participants with Tier 4 OOPAs will receive notification. Basically, all those people that are in Tier 4 right now, we have to let them know that we're rolling their balances in. There's about 3,000 of them that were already OOPA applicants. We wanted to send them a notice and just let them know, hey, we're making your agreement longer, but you don't owe us any more money. If you don't want us to do this, please send us back the form that we enclose, and we'll opt it right out. Then there's going to be updated application materials that we're about to go over. The ones that we're going to go over are the application, the Tango Title Supplement, the expense supplement, a zero income supplement, and a disability supplement, which are both brand new. So we're going to right now go through the application materials, and then we'll have another time for questions. All right, so the application, this is the biggest thing that's changed, the thing that most people are going to use. If you look at it, it's the one that looks like this. It's page 1 through 3. In the top corner, it's also the top of your packet. So what we did was, I didn't bring examples of it, but if you've seen the old OOPA application, it's a bit older looking. It looks like a mimeograph, I think. So we updated it. We just tried to bring it a little bit more current. But we also really tried to do is take those two really dense front pages that were all the application instructions you may ever need in one spot. We try to take that application instruction and put it where someone would need it during the time that they're filling out the application. We also, if you'll see, renumbered everything to have like different numbered sections. That's both for taxpayers to understand how their documents are required, but also for our staff to know in training materials. So I can write training materials and say, reference section 1, instead of just reference the 4th question down, but like indented 3 times. So I just want to walk through what these changes are. For those of you that didn't ever use an OOPA application, great, you don't have to break any bad habits. If you do, if you have a question, if you think something's not gonna work based off of your experience, please shout that out right now. We did this staff training for our staff, and I think we've updated the application 3 times based off of feedback that we got from staff just about how this operationally could work a little bit differently. And I will say I'll break my own rule. If you have something that you want to shout out and say this is not going to work, let's do it right in the moment. We won't discuss it too much, but I'll make sure I note it down as a change. So the first thing we did is we really wanted to stress, based off of Curtis's feedback over there, that there is no down payment required for an OOPA agreement. We wanted to put that right in the application so that even if, say, it's being done by an outside counsel agency or being done by a housing counseling agency, for whatever reason, no one can be unclear that you do not need to provide a down payment to get into an OOPA program. That's one of the big things that was going on before. We want to make sure people don't know about, make sure that they don't have to do that. We also wanted to take the question, do you live in the property, which is really important for OOPA, and put it right at the top, because it's not worth anybody's time for anybody else to keep going through this after they check no. You also, so then we'll move down to applicant information. None of this has changed in terms of what information that we're asking, just the format, except for birth date. We didn't ask birth date before, but we have to start asking it now, and we're going to have to start verifying it now because of those caveats we talked about, especially around the $0 a month payment agreements. You know, we need to verify that someone is disabled or someone is over 65, so that's how birth date comes in. Everything else should be pretty much similar. You'll see section 1, the document checklist here. That is, we took the information that was all stacked up about those documents and really tried to put them in visual line with the information that we're putting down, because we really want people to understand is that if you fill out section 1, these are the documents that you need to provide. Because as you'll see as we go through, there's more and more situations that require additional documents, but only because of additional circumstances, and we don't want everyone thinking they gotta go out and get every single document. Second one is additional applicant information. So these first 2 questions are, is your name on the deed of your home, and is your name on the property tax bill? These 2 questions have been in the OOPA application. We just tried to separate them out because they're what indicates to us, are you someone in that tangled title situation? Are you an equitable owner? And it lets our staff know, okay, did someone check either one of these? Okay, that person needs to be directed to the law department to have whether or not their equitable ownership is considered valid or not. We also want to make people understand that what is a tangled title, and that you only need to fill out the tangled title supplement if you check no on either one of these boxes. Moving down from there, do you have a permanent disability, or are you a widow or widower? Those are new questions. They come with new documentation requirements that you can see on the right there. We'll talk about the disability requirements for documentation in a second, but for widowhood, but for that, the only real documentation we can provide is a death certificate. Someone needs to verify that their spouse died via death certificate.
And a copy is sufficient.
A copy is sufficient.
Like not showing an original.
And for, this is an important distinction too. And if you ever don't encounter this, please let me know. But copies are always acceptable for any documentation. It's written in the law, we must accept copies. So just let it, sometimes, human error happens. So just let us know if it doesn't, and we can try to correct that situation. All right, moving forward, you'll see section 3 is household income. For those of you that are familiar with the old application, you may notice that this is a little bit longer. If on your copy's net income, rental income is bolded, I don't know why that is. We'll get that fixed. But what we did was we took out a lot of the different, 3 or 4 of the categories that were on the old application, because no one ever really had that type of income, and it can be just as easily covered by another box. We did, and we also tried to order it in the way that we're most commonly seeing forms of income come in. So the most common form of income we get from applicants is Social Security benefits. After that is your paychecks, pay stubs, and then pensions. Everything else we see much less frequently, so we wanted to make it as easy as possible for our staff to read it and for people to fill it out. You'll see down here is document checklist. Again, it just provides different types of examples of documentation you could bring in to verify your income. All right, section 3B. If I can move on, if that's okay, is so before people definitely came to us and said I have 0 income, because there are people in that situation. It was just a little harder for people to verify that you don't have a thing. It's hard to prove a negative, and we didn't have any real clear guidance internally about how do we accept that kind of thing. So right now, if you are gonna report that you don't have any income, we want people to check this box. And then what we're gonna do is go through one of our new forms, which is a zero income statement, which is just a codified affidavit, but let's talk about that in a second. So then section 4 is how should we calculate your monthly payment. On the old application, we presented it as option 1, and then explained in a big paragraph about how that was just just your monthly income, 10%, 8%, 5%, or 0% now. And then option 2 was a individualized assessment based off of your income and your expenses. We were trying to rephrase it so people understand that it's not really, it can be option 1, it can be option 2. People can choose to go to the individualized financial assessment first. It's just the program is designed so that that monthly payment, it's going to be really hard for someone to actually demonstrate that their they don't have 10% net income or 8%. So we want people to go through this option first if they can and see what's affordable to them. And then if they want to, they can go through the individualized financial assessment. And we really wanted to help explain very briefly what that really meant to people when they checked either one of those boxes. Section 5, going back to the application, is should we contact anyone else about this application? That was always on the old previous application. It's generally used by housing counselors at DHCD as a way just so we know if housing counselor X communicates with us, we have authority to talk to that person. But anybody can really, right now under the current program rules, one of you could write your names down and we would have just as much authority to talk to you as we do under that system. So you all can put your names down here if you're working with that constituent and you want us to be able to communicate to you anything about the program. Because in general, even if you submit this application, we are not supposed to let you know if they're approved or not because that's technically financial information that on a taxpayer we can't disclose. And then next section 6, this is just the signature block. This is exact same text except for the middle paragraph where we just talk about something that we're starting to do, which is we're going to take these OOPA applications and treat them each individually as a homestead application as well. Since you are establishing owner occupancy through this program, you by definition qualify for homestead. The law actually calls them homestead payment agreements, not owner occupied payment agreements. So what we do is, and we did this last year, is we took a list of everybody who was in homestead and a list of everybody who's actively paying on their OOPA agreements. We found who was actively paying that didn't have homestead. Found 3,600 or so people, and we gave them homestead. That saved those people about $1.6 million on their taxes in 2018. We're going to do that every single year going forward. It's already been in practice with our staff that if they see that someone doesn't have homestead on their account, they will tell them, hey, please go submit this application. We're asking our staff to still continue to do that. This is going to be much more, we're hoping, of a safety gap or a stopgap, but we know that every summer, coinciding with our annual bill process, we'll do this data match to make sure that everybody is brought into the program, that being homestead, that qualifies for OOPA. And we're just giving ourselves some language that covers us in that situation. And then at the bottom is just ways you can get in contact or submit the application to the Department of Revenue. We'd really love it if everybody sent their agreements to revenue.payment.agreement@phila.gov. Feel free to send it in by mail if you feel that that's the best way to get it done. But if you could also send us a copy through the email, it's really easier for us to track it this way. So you're going to get much more of a response, I think, too, if you do it that way. And then also we have all of our different, our 3 different in-person places that anyone can go and do anything in regards to revenue as well. Those are in the Concourse, 22nd and Lehigh, and Castor Ave and Fox Chase. Fox Chase? It's almost Fox Chase. Kind of Fox Chase, I don't know. Didn't spend a lot of time in the Northeast. All right, so I grew up down in Graduate.
Question for you.
Yeah, go ahead, one question.
On the property, so if it's a commercial property, designated commercial property, but has apartments living above it, and the owner lives in that property, can he apply for it?
Yes, that's their owner occupied.
That's a change in, because I know we have one.
That's not a change. I think maybe we have something we can talk about. The question was, can someone in a commercial property qualify for an owner-occupied payment agreement? if they're also living in the home
Right.
or living in the property? The answer is yes, they can. Sounds like that might not have been your experience with your constituents, so
Yeah.
maybe we want to talk about on an individual level what that person was going through and see where the
Okay.
issue happened. And that goes for everybody else here too. If anything I'm saying is like, well, that's not how it's working, Graham, let me know and we can walk through how to troubleshoot that, because we're a big department. You know, it's hard to disseminate information so these new changes don't always make it out. Sometimes practices happen that I'm not aware of, but you guys are my best resource for finding out how things are going on is actually constituent service. You know, I call them elevated issues, you may call them complaints. So the next document we're going to go through is the Tangled Title Supplement. The only thing we did in here was layout changes. This is what someone, when their name is not on the property tax bill or the deed, this is what they're going to need to fill out. I don't want to spend too much time going through it since we don't have a whole lot of time, and we can do that in another training about processing of applications. Another question.
Back to the household expenses, so when they're filling out the application, they need to send proof of each of these expenses, because I know the proof of residency, they ask for possibly 2 utility bills, but they need to send it with the application, all of this information.
All right, so I think that means we're done with questions about the Tangled Title Supplement. No, it's cool. Now you want to get there, and I get it. One thing I want to say really quick is when you're in the Tangled Title Supplement, good, 'cause we don't have to answer questions about this. But there's additional documentation requirements. I would say it's best to let our law department talk to the person about these. They can be moving based off what the situations can be fluid based on what you're talking about. All right, so moving on to the expense statement. All right, so we're at the expense statement. So these expenses, if you're sitting down with someone, if the expense is on here and they have it, and it's a regular monthly expense, then it should go down here. The rubric by which people are grading it or looking at this when they're in our offices are, is it regular and is it consistent? So an example to the earlier question of what would be considered an unreasonable expense, a $400 someone writes down laundry $400. I mean, that's like, honestly, day to day, that's what the unreasonable expenses that we see are, just people that are maybe misinterpreting what we're asking or are feeling that their expense is a little bit higher than what it is. Because even in that situation, which is one I dealt with personally, you know, the bills didn't even reach 400. I mean, they were a lot for laundry. I mean, it was a lot, but it was like $100 is what it came out to. I think that person just felt 400 was what they wanted to put down. I don't want to go into their motivations, but that's the kind of test it goes through. I will say that what I have never seen is that net expense, even after we verify all the expenses and we take a look at the income, I've never seen it be below what we would set as a percentage. So what I'm saying is every taxpayer has a right to request either situation, and they maintain that right throughout the process. That's why they can check either one of those boxes. But what we're trying to do is really stress, which is what the spirit of the legislation was and what the way that it's all set up, is that, you know, if you're in that tier 1, 10% of your monthly income is likely something that you can afford. But if you can't, you know, please let's go through this process. But let's only go through this process when we need to, not every time. And what we were finding is that a lot of people, even if they checked option 1, were going through the application and filling this out anyway. So we were trying to really, what that language is all about and that structure is all about, is making people understand this is only a if-then situation rather than everybody. Does that make sense?
Yeah.
Can I ask a question?
Yeah, it's okay.
Cable and credit cards.
Cable and credit cards.
There have been times where our body has, you know, if you can afford cable, you can pay your bills.
Is cable on here?
I mean, now you need cable because the TV doesn't work.
Well, I used to put it on
Okay.
telephone.
Well, that's actually, so for food stamps, that's one way of putting a cable bill on an application, but we're not dealing with food stamps. That's what I used to do. Sorry.
I see a lot of people who are really behind, and one of their big bills is credit card bills.
Yeah, so I mean, I think it's one of the things that we're doing internally when we write this program manual. One of the reasons we're doing it specifically, one of my motivations is to provide a little bit better clarity around this section of the application, because there really isn't a whole lot besides this that is the rubric. that's written down for like, how do we grade that? Because we want to take that choice or that decision, out of any individual person's hands and put it and codify it down. Because right now that person could come in and, as on this, I mean, cable would not be something that we would count. Someone could put alcohol. We would definitely say no to that.
We have seen it.
We'll write that down right now. That's a no, probably on this.
We'll deal with people where cable is the first bill that they pay.
Yeah.
The idea of not paying their gigantic cable bill is, you gotta.
Yeah, I right now, we would not accept that. I don't think any program revisions are gonna come about
All right,
with
that's
us
good. That's
that
just
being a
wanted to
thing.
know.
I think if anything, this list might get a little shorter. We'll move on to the next document, because you're probably gonna have more questions about that, which is the zero income supplement. So this is, again, someone has no income, they say I have zero income, nothing's coming in, they don't have anything to report. Everybody who's applied for OOPA has always had the option of filling out something called an affidavit, saying that I do have zero income, and I swear under all that is, and ever will be holy, that this is the thing, and true. And technically, that is legally just as binding as anything else anyone would ever submit with their signature. But it's hard in a day-to-day situation to accept a handwritten note. So what we did was, mainly for our staff, but also so for taxpayers to understand that, you shouldn't be denied for not providing documentation. We created this zero income supplement so that we put our logo right on something that says zero income affidavit, so there can be no ambiguity that someone filling this out is providing the verification of zero income. And to answer whatever question might come up about compliance, yes, we're building in, like we talked about earlier, certification for this. In the law, there has always been the option for the Department of Revenue to come back and look at anyone's OOPA case, no more than once per year. We're developing internally, like, what is the frequency we want to look at, what's the percentage of cases we want to look at per month to make sure that we're evaluating it constantly, and also how can we front load a lot of that verification off of paper documents, but onto using tools like our data warehouse. So that data warehouse will capture income information, and we need to tweak it to make it work for our purposes, but we could also use it to make it so that we can just verify people's income based off their social security number, not just documentation. Those are things that we're working on. The updated legislation took precedent over that, so we have put those projects on hold. But we'll be moving back into those to see how we make it easier on taxpayers to verify. Because actually anything that makes it easier on taxpayers electronically makes it much more makes us much happier about whether or not we can believe these pieces of paper in front of us. Because you can do a lot to a piece of paper, you can't do a whole lot with the information the IRS sent us. Next one, disability supplement. First thing I want to say about this form is that no one needs to fill this out. There are so few people in this world that need to fill out this form. There are such a small select group of people that the first thing you should think of is, why shouldn't they fill out this form? And I'm saying all that is because the Department of Revenue really doesn't want to get a whole lot of these forms, because this is medical information. And we want to have as little of this as possible. But the reason we made the form is to get in the way. If you're looking for it, it is the last page of your packet. It says disability verification form, right up in the top left corner. All right, so what this is designed for is if you check yes on our application and you are disabled, and we need to use that information to find out if you have a permanent disability so that you can get that $0 a month payment agreement, we need to verify that you're disabled. The way that you qualify to be disabled under OOPA is to have one of these other programs. So you need to qualify underneath the way that Social Security or retirement. So basically what it all boils down to is they're going to be getting income for their disability. So they're going to have to prove their income to get into OOPA. So they're already going to be giving us their disability proof. And this form is for the very few people that are applying for OOPA while they're in the 1 to 2 year process of applying for Social Security disability. This is not for everybody who's like, no, I don't have Social Security disability, but I can't work. And, we've all dealt with that person a lot, I'm sure. That person may have a disability, and Social Security or railroad retirement, whoever may have not accounted for it, but unless their doctor, and that's who fills out this form, unless the doctor who's helping them apply for those programs is willing to sign this piece of paper and say, I know this person to be disabled, which is something that they have to put on the paperwork for Social Security, that's the only person who's going to fill this out. So what we really don't want to see is a lot of people thinking, okay, I'm not in Social Security disability and I'm not going to get it, but I need to be disabled for this program. they're gonna try to fill out this form as a way to do that, but we're gonna still have to just keep rejecting it because we can't accept anybody as disabled.
You actually have to be in a process of already had applied for these
You,
things.
what you need to do is have a doctor that is
Right.
comfortable signing this form, and the only doctors that are gonna be comfortable signing these forms are the ones that have the medical records that you would need to have in front of you to be the person helping apply for Social Security disability. And something else everybody should know is the text of this form is a almost exact reproduction of the property tax and rent rebate schedule E, I think, which is how do you prove you're disabled when you can't do what we just talked about in terms of verifying the Social Security disability, and we copied it because they told us it worked.
So if they were turned down for social security
Mhm.
disability, they are not,
They're not,
they're not gonna get that.
they're not gonna get that because that person has been declared not disabled under the rules of the Social Security Act and Railroad Retirement Acts.
And do you have a way to check that?
Yes, there's a way, there's a national provider ID network, that's why it's down there, that we can verify that that person is actually a doctor signing it. And, you know, that is a very good point we have concerns that, you know, people will just start filling it out, and that's,
It's amazing how many people are disabled, but no one agrees with them.
it is, and I think that's, yeah, we don't really have a safety belt for that person. So, unfortunately, we have to be constricted by what the law says we have to do. Any questions about the form? The question was, will someone, if they get into an OOPA agreement and default, be given a second OOPA automatically? The answer is no. That's a rule that's been in place since the beginning of the program. Once someone defaults on an OOPA agreement, the Department of Revenue has the discretion about whether or not we give them out a second payment agreement. So I'll say that what that comes out to in practice is that in most cases, yes, we will give them a second agreement. The process changed a little bit. It's not that representatives in the concourse level can't make that determination on their own. Our law department makes that determination based off of lots of different factors, mainly around what's the interaction been with that client. So that'd be sometime when someone would need to go upstairs to the law department, but that's something still someone on the concourse would tell them to do. But in practice, unless someone has shown us that they are serially defaulting on agreements, they're just like getting into an agreement, never paying, asking for another one. When that happens 3 or 4 times, we still try to even get that person into an agreement dependent upon the situation. But the people we don't do it are like the people we know you've tried to get 3 OOPA agreements. That's why that discretion is built in there. But again, our baseline is we want people to be in agreements because agreements are guaranteed income, they're guaranteed revenue, and nobody wants to foreclose on anybody's house. Yeah, so we try to work with people as much as possible until it's very clear that income is, that like this agreement is going to never be complied with. I think, but that's our law department makes that determination and gives us guidance.
That's all I have.
That's all you got? Any other questions, guys?
Oh, to piggyback off of that, how many payments would it take before the default takes in?
Okay.
Because I use the year as an example.
Sure, so the question is how many, basically when do you default? What are the rules about defaulting on an OOPA agreement? So they're all written out in the legislation if you ever want to go take a look at it. It very clearly prescribes what we must do down to some pretty minute detail. But basically you get a 45 days after you miss your first payment. So if your payment was due on January 1st, by about February 15th, you're going to qualify to be sent, and then we do send what's called a warning of a risk of breach notice. And that's saying, hey, you are at risk of breaching your agreement. You basically, it's all in there, but you basically get 3 of those, and then you breach. And then throughout that process, you're given like a moving, we call it a cure amount internally, if you ever hear anybody say that, but it's basically the amount of money you need to get back up to speed with the agreement. And the process for the actual default to happen can take at least 3 months of non-payment to transpire, but it's all written out in the legislation. And what we have to send and how we have to send it is even prescribed as well.
If you use this new form to, like if you did get behind and you want to get back into another agreement, you can use this form to apply for a new agreement.
Yeah, so you just use this form to apply for an OOPA agreement, whether that's your 6th OOPA, or your 1st OOPA, or your 17th OOPA. And then what we do is once we see that, if we go back into our system and we see another agreement has already been on the account and is defaulted, that's when our taxpayer service representative is gonna say, okay, we've already had an OOPA agreement in the past of which you defaulted. We're gonna take this application you have, you're gonna go upstairs to the law department. They're gonna evaluate whether or not they wanna give you this second discretionary OOPA, is how we
So-
call it internally.
So if they sent that via, that's if they did it in person, if they sent it via mail or
Mhm.
email, you guys will reach out and tell them.
We'll send them, we'll basically send them, no, we're rejecting your application, but here's information, we're rejecting it because of a previous
And
default.
request them to come in
And we'll
to
say,
meet with
yeah.
you guys.
Yep.
Okay.
Any other questions? About any of this stuff, any of our other programs, senior tax freeze, I mean, wanna say a homestead, loop, especially on loop, any questions about that? Okay. That's the first time I've never had a question about loop. All right, well, thank you guys,